Fastenal, F-A-S-T on the NASDAQ. I'm sure that's a NASDAQ company. It's it's an industrial company, definitely not high tech. They're selling nuts and bolts and fasteners and studs, washers, building products, lots of stuff like that. Very much an industrial product, pretty much a distribution channel for these types of things, wholesale kind of thing. Okay, so here's a headline. It just kind of cracks me up a little bit. Industrial distributor Fastenal reported weak earnings. It's bad news for manufacturing. Well, I think that's a little bit exaggerated here. First of all, they missed estimates by a penny. They posted 36 cents instead of 37. They missed revenue by 2 decimals to the right. One digit, 2 decimals to the right. So, in other words, they were supposed to post 1.38 billion. They posted 1.37 billion. I mean, give me a break. How does even anyone notice that's how do you even call that a miss? That's ridiculous. Also, that same revenue that was a miss on estimates was up 7.9%. It's not that bad. Now, fair enough. If you look at the financials, which let's do that right now. Let's get those financials up here. Here we go. That's the model, but I want to actually dive into the financial statements. Okay, here we go. Okay, so here's this line up here is the revenue line. If you can see my cursor here, I'll try and highlight it a bit. And that's the compared to the same quarter. So this September quarter did 11.8. Well, that's compared to the September quarter in 2016. And then December, etc. Same thing. And it's running at 11, 14, 13, 13, 13, 13, 10. Okay, and 7.9 now. We don't have that quarter yet. We'll get it in a couple of days. These are not ATMs. These companies, they don't generate exactly, just because it's been 13 for so many quarters in a row. 7.9 is not all of a sudden falling off a cliff. They're not straight lines. They're not perfectly consistent. But this is a very good company. Look at our profile here. Look at the long-term track record of return on capital. They had one little dip back in 2019 down to 14, and pretty much before that, since 2004, it's been 19% return on invested capital or higher. Other than that one exception of 2009, which everyone was hurting. That was a tough time in the economy. So yes, if the economy rolls over, this is going to roll over too. It's going to post another 14% return on invested capital. The shares will come down. That's all standard. But this little pullback here, unless major circumstances change, is just an opportunity. That's the way I see it. So Fastenal, a weak quarter, I say not so fast. Let's actually take a look at buying a bit more at this level.